back, my familia. Welcome, welcome. I just touched down back in the home state of Nebraska. Just got back from a 6 hour car drive. And we're right back on the computer, ready to drop some value as always. It's just how we love it. Grind never stops. But, you know, I'm not going to get into a huge introduction again tonight. A lot of you guys were on last night's call, but if you weren't, my name's Blake McLean. I'm one of the top leaders here with Revolt, been here about 9 to 10 months. And, really the person that I want to spotlight, kind of put the show on for tonight is the one who's really hosting, putting this whole free trial together for us. First and foremost, drop in the chat where you're tuning in from. And if you guys have been enjoying, so far last night's session, some of the trade ideas, and if you guys are hyped and excited for tonight's value, what Donnie's about to talk about, because I know for a fact it's, just going to add on to last night. It's going to be 10 times better. So we're tapped in from Nebraska, Canada, Moncton, geez, everywhere. Nigeria, Colorado, Nebraska, Vegas, Jamaica, Cali, Philly, all over the place. Love to see it. Love to see it. So I'm gonna just do a quick introduction, for those of you who maybe weren't on last night's call, but the individual that's hosting this free trial, Mr. Donnie Taylor. He's an individual who's been in the space of trading for around 7+ years now. And he's a huge reason, I can give a lot of credit back to him. He's a huge reason on why me personally, at the age of 20 years old, has became independently profitable within 10 months of starting my trading journey. Okay, I didn't know much before. I was always investing in crypto stocks, that kind of thing, but I had no idea how to trade. I just knew the market went up and down. I didn't even know you could make money when the market went down when I first started. And then I found that out and I'm like, oh, this is the golden route to success right here. But, really, Donnie is somebody who's the true definition of a servant leader. He teaches tens of thousands of people around the entire world how exactly to trade like the banks, which, I know he's going to get into on tomorrow's session. But the value that this guy brings to the table, just every single time that he jumps on a call, is just immense. And, truly what he's done over the past couple years is really starting to pay off and come to fruition. So get your notepads out, get your pens, get your piece of paper. Make sure it's a blue pen. Make sure it's a blue pen. It always sticks to the brain longer when, you write it on a blue pen. It's always easier for you to remember. But I want to, go ahead, introduce the person who's really just putting this whole thing together and really giving you guys the value that you need to go out there and have a step-by-step blueprint to get started in your trading journey and, potentially see the same results as I have and a lot of other people have within the community. So, Mr. Donnie Taylor, if you are there, my brother, would love for you to come up and kick off day two. Let's go.
Day two, baby. Let's drop some twos in the chat for day two. Shout out to Blake one time taking the time out of his day after a 6 hour long car drive to give us a little welcome back and introduction. Again, if it's your first time here, welcome. Hopefully you had an opportunity to watch back the day one recording. And if you didn't, there's your homework, leaving the session. But for those of you guys that are here for day two, super excited to get into today's topic. And yeah, shout out to those of you guys for being here on time. And I want to encourage you guys that are maybe coming in a little bit late to do your best to to be here right at 8 p.m. Eastern sharp, just so that we can be mindful of everybody's time, and that way we're not having to condense lessons, to shorter than an hour, just to make sure that we're being, on track and on time with regards to these sessions being roughly an hour in length. One thing I'll mention too is if you're in a position to do so, it'd be great to have your camera on so I can see your beautiful face and it shows me that you're attentive. And honestly, it's not for me, it's for you. Kind of just hold you accountable and being locked in for the next 50 or so minutes. And it's good to see some faces. I'm not gonna lie, it's good to see some faces. Shout out to Blake, shout out to Connor, shout out to Dayton, Kenner, Luke. We got Micah. Amazing, amazing. Good to see some faces. But today's topic, okay, and just before we dive into it, a little recap of yesterday. Yesterday, we talked about really some of the basics when it comes to trading. And actually, had some folks that had responded really positively to the information we shared yesterday, both on the stream and off the stream. And so, really excited to kind of build upon what we talked about yesterday. If you missed it, yesterday, really what we overviewed was quite simple. We talked about the basic principle of how to read a chart. We talked about how, as traders and individuals that are engaging in day trading, we have the ability to make money in both directions. So it doesn't matter if the market's doing well and trending higher, doesn't matter if the market's doing, quote, poorly and trending lower. Either way, we're in a position where we can make money taking trades. We also talked about how risk to reward is really the secret to success in trading. We talked about how you could literally be wrong more than you're right, but you can still be profitable. And I think that understanding and concept alone, if you were to just take that away as your key takeaway from yesterday, that's something you can really run with in the markets. And we did allude a little bit to take profits and stop losses on yesterday's session. We also, at the end of the session, when we were doing some Q&A, had some really great questions, and we discussed pips and lot sizes. And that's where I want to start for today's lesson is really go into the basics of understanding how money is actually made in the markets and how we measure moves in the market to determine and kind of be able to gauge the way in which we're going to go about turning a profit in the markets. Now, if you're a veteran on this session and you're like pips and lot sizes, Donnie, this is the basic stuff. Okay. Sure, you're right. Absolutely. But a mentor of mine always said that it's important to master the basics. If you want to be a master in anything, doesn't matter if it's trading, doesn't matter if it's in sales, doesn't matter if it's in social media marketing, doesn't matter if it's in, your job or you as a student, whatever the case is, mastering a certain topic, you have to master the basics. There was a quote, maybe you've heard it before, from I'm trying to remember the exact person who had said this. I think it was Muhammad Ali. I could be mistaken. Don't quote me on that. But the quote itself is really where the power comes in this statement. And it goes along the lines of, I'm not afraid of the 10,000 strikes that you practiced once. I'm afraid of the one strike you've practiced 10,000 times. So think about that with the basics of trading. How often have you gone back to the basics? How often have you gone back to the basics and actually done your best to explain the basics to somebody else? A mentor of mine once said that teaching is the best way to learn. Okay. The best way to learn is actually through teaching. So this is the material that all the way back in April of 2018 and up until I would say, around a year later in 2019, this was the material that I was studying, teaching to others, teaching to myself, and that really gave me a solid foundation to now come back to this principle and these principles that we're talking about on this boot camp, which I rarely talk about this stuff on the sessions inside the community because this is, the basics, right? And a lot of the times the trainings that I'm doing are very advanced. And I'll say this, I haven't done a training talking about pips and lot sizes in months, months and months and months, if not years. But I know this stuff. I don't know about this stuff. I know this stuff because I've mastered the basics. So it's not that I don't claim to be a quote master, by the way, but one thing I'm certainly the master of is the basics. Okay. So let's talk about pips, lot sizes. We're going to get into how to structure profitable trades and just trades in general. And we're actually going to take a trade or two together on today's session. So if you're here just for the trades we're going to be taking together, fantastic. If you're here to absorb the knowledge and take advantage of the trades we're going to be placing together, amazing. Okay. But real quick, shout out to those of you guys tuned in from all over the world, man. Like Blake was saying, we got people all over the world tuned in today. We love to see it. We got Ghana, Nigeria, Philly, California, Vegas, Jamaica. Okay, I know we got the Canada and US squad here too. We love to see it. We love to see it. So let's go ahead and pull up my screen here. And I want to start off the session by really just giving you guys a rundown of what exactly a pip is. And this is an important principle to understand. And there's a couple of things that I want to share that even might be new information to some of you that have been here for quite some time, that have been trading for quite some time, that, and when I say quite some time, it could be varying in lengths. Maybe it's a couple months, maybe it's, you know, uh, I mean, hopefully it's not a couple of years. Hopefully you should know this if you've been doing this for a couple of years. But we're going back to the basics, okay? And it's important to really solidify the basics. So, what I want you to write down in your notes, if you're taking notes, okay, white paper, blue ink. There's been studies done. It's like Blake said. Blake might sound kind of crazy for mentioning that, but it's actually the case. You, in taking notes on white paper and blue ink, will retain information better. It's weird. I couldn't tell you why, to be honest. They've just done studies, and studies show white paper and blue ink is like some way of retaining information at a higher level. So it's really quite cool. But write down in your notes the word PIP, PIP, okay? And this really stands for point in percentage. All right, that's the official kind of abbreviation, what it's actually representing. And essentially, okay, PIP, a PIP is essentially what you are using to measure the movement in the markets. So if let's say, right now we're on the Bitcoin chart, let's say that Bitcoin trades from where it's currently at about $108,000 to $120,000. Okay, which we're probably going to see that in the next couple of months. But just hypothetically, we'll talk about it in hypotheticals, and then of course it'll happen in the future. But for now, hypothetically, how would we measure that move? Well, we know 108,000 to 120,000, that's a $12,000 move. But for us as traders, okay, for us as traders, I'm recording this and I'll be sending the recording, Haney. So there's no need to cloud record it. It's going to be uploaded and sent to everybody. But for us as traders, we need to understand what that movement is in pips because a pip is the unit of measure that we really care about as traders. Okay. Sure, the dollar fluctuation is great if you're buying and holding Bitcoin, which not financial advice, but a great thing to consider doing and do some research into would be Bitcoin. All right. It's not just this here today, gone tomorrow, asset. It is literally going to be the talk of the town as time continues and goes on. It's not going anywhere. It's why all these massive corporations and institutions like banks are acquiring Bitcoin. That's I don't want to get into a side tangent here. The point is the dollar fluctuation is significant if you are investing in Bitcoin, where you're buying and holding the asset as the asset appreciates in value. Of course, you can sell at a profit or you can preserve wealth, whatever. But for us as traders, we're focused on what are called pips. Okay. And for us to make a move from 108,000 to 120,000, that's a 12,000 pip move. That's a 12,000 pip move. So just to write this out, and we're going to discuss this in a couple, different examples. I want you guys to write these out. When we're talking about currency pairs, okay, for example, euro against the US dollar, which is euro USD, which is currently on the right-hand side of my screen here. You can see that at current price, this is fluctuating in real time because the markets are open 24 hours, 5 days a week. The exchange rate for Euro USD is 1.17200 approximately. Okay, so we'll write this out, 1.17200. Now, if you're going to go to a bank and exchange physical euros to physical dollars, you're probably not going to see 5 decimal points. You're going to just see maybe the first three, right? 1.172. Okay. You're not going to see all 5 decimal points. For us as traders, we actually care about all five of these decimal points. A lot of people have this misconception that to be a currency trader, you have to have a ton of money to really make it worth your while because the fluctuation of currencies is usually fairly minute. You might see it fluctuate 1 cent, 2 cents here and there. Maybe if there's a massive worldly event, you'll see a big fluctuation in the exchange rate, but it's rare you'll see these massive moves, or at least on paper. For us as traders, we care about the fluctuation of all five of these decimal points, even if it's just very, very, very minuscule to the fifth decimal point, because we track and trade in accordance with what we call pips. So for Euro USD, which has this is kind of the way the exchange rate is written out. You have 1.17, and then there's three extra decimal points after the 17 cents. A pip is the second last digits that we're seeing for specifically Euro USD. This is what we call the pip column. Okay, your pip, all right, one pip would be the equivalent of a fluctuation from 1.17200 to 1.17200. to 10. That's one pip. That is a one pip move. Okay. So if we were to draw this in, just kind of like put a little arrow. That is a one pip fluctuation. Fluctuation. There we go. Okay. One pip fluctuation. So what's cool about this, and we're going to bring in lot sizes into the equation momentarily, but you as a trader, you get to determine exactly how much each pip is worth. So if you're trading with a certain account size, you might decide that every pip is worth $10. It's a pretty big lot size, but you could decide that every pip fluctuation is worth $10 on your trading account. So if we were to see, a 10 pip fluctuation, 10 times 10 is 100, that's a $100 move. Okay. So you kind of have your ones column, your tens column, hundreds column, thousands column. So even just a 1 cent fluctuation in a currency's, exchange rate, that is 100 pips. And on the smallest lot size, which is possible, we'll get into lot sizes in a second, that is a massive move. A 100 pip move is considered a pretty large move in a currency's exchange rate. But you don't need to see massive moves to make really good money trading. So let's talk about lot sizes, and we'll come back to pips in a second because I want to get into some more detail. But lot sizes are essentially, lot sizes are essentially what determines the amount of money each pip is worth. So, for example, there's three different basic types of lot sizes. You have 0.01, 0.10, and 1.00. Each of them are kind of referred to in different ways. We call this a micro lot. This is called a mini lot, and this is called a standard lot. Now, a micro lot is worth 10 cents per pip on Euro USD. A mini lot is worth $1 per pip on Euro USD. Okay. And this is going to be different from one currency pair to the next, and we're going to get to that in a second. A standard lot is worth $10 per pip. Okay. So basically put, if you were to see the fluctuation of the exchange rate literally just be one pip, if you're taking a micro lot, which is the smallest lot size that you can take on your trading platform, that would be 10 cents. So if you're in, let's say, a buy, okay, anticipating that this exchange rate is going to increase, and then it does by one pip, you are technically in a trade that has paid you or is going to pay you if you close a trade 10 cents. Now, typically, just to give you some more illustration here, you're usually going to hold trades more than just one pip. Okay. I don't think I know anybody on the team who's opening and closing trades for a one pip profit. It's not usually going to be the case. And also this one pip fluctuation can happen very quickly. And so let's say that we had the exchange rate fluctuate from on Euro USD 1.17200 to 1.17400. Okay. That would be considered a 20 pip move. All right, that 20 pips would be worth $2 on the smallest lot size. That 20 pip move would be worth $200, or sorry, $20 on the mini lot size, and then $200 on the standard lot size. Okay. Now, later on this call, we're going to pull up MetaTrader 5 together, which is the platform that just about everybody on this call should be using. If you're using a different platform, it's fairly similar, but MetaTrader 5, we're actually going to take some trades together, and I'm going to walk you guys through how to set and determine what your lot size should be. I did state yesterday on the call that any trade ideas that we're sharing this week that are going to be giving you entry and exit parameters on any asset, we're going to tell you, not financial advice, but we're going to tell you if you're going to use proper risk management on this trade, this is the lot size you should use for every $100 you're trading with. That's why it usually says 0.01 for every $100 in your account. So if you're trading with a $1,000 account and the trade idea says 0.01 per $100, well, then you would take a 0.10 because you're trading with a $1,000 account. Okay. And this is overviewed in the pinned video in the Telegram channel. Now, key point, and this is potentially where some of you are going to have a, oh, I didn't know that moment if you're experienced in the markets. One pip is not the same on Euro USD as it is on a different asset. So, for example, something like gold, which is XAU USD, if the price of gold was, let's say, current price around $3,003, or sorry, $3,303, and we'll call it 50 cents. Okay. The the way that pips are calculated on gold is different. All right. It's still going to be the second last digit in this particular scenario. But the way I look at it, gold is calculated differently because it's moving way faster than a currency pair. So here you have your pip on Euro USD. Here you have your pip on gold. But the difference is gold is fluctuating tremendously more volatile, tremendously more with a lot more volatility in comparison to something like Euro USD. You will see 10-cent fluctuations on gold like it's nothing. Today alone, we saw like a 300 pip move in a relatively short period of time on gold. Something like a 300 pip move on Euro USD, that's a 3-cent fluctuation. It's rare you'll see something like that in as short of a period of time as you did with gold this morning. So pips are measured the same way with gold, the same way as Euro USD. So for every micro lot, it is in fact 10 cents per pip. But like I mentioned, some currency pairs that will be different. Your 0.01 might be worth a different number if you're trading a cross pair. It's what we call the cross pair, which is basically anything that isn't being traded against the US dollar. So maybe just make a side note. We're not going to spend a lot of time on this, but you'll get to kind of see this yourself as you're trading. The lot size value will differ from one currency pair to the next. If you are trading what we call a cross currency pair, which means you're trading something like euro against the Canadian dollar, or euro against the Japanese yen, or euro against anything other than the US dollar, the value of your micro lot is probably going to be slightly different. It's not going to be much difference. It's not going to be a massive difference, but you will see a difference in the weighting of each lot size depending on what it is that you're trading. So, with that being said, oh, great. We love to see some of the results in the chat. You guys are crushing it. Love to see it. But let's move forward. Okay, let's go into an example such as Euro JPY. Okay, Euro JPY. So this is Euro against the Japanese yen. EUR JPY, right? Let's say that the exchange rate on Euro JPY is kind of around current price, which is 170, 172, 150. Okay. Notice how there's not 5 decimal points with Euro JPY. You can kind of see it on the right-hand side here. All right. There's only 3 decimal points. So similarly to gold, similarly to euro, the pip is going to be that second last decimal point. But again, Euro JPY is going to be moving probably quite quickly in comparison to Euro USD because there's fewer decimal points, and you'll see the fluctuation of this currency's exchange rate move quite rapidly. Okay. I will also say that the lot sizing is going to be slightly different for something like Euro JPY. Luckily for you guys, there's something that makes the whole process and this whole understanding of, well, what size, what lot size should I take on my trade, or how do I know what lot size to use? I'm going to show you guys on MetaTrader 5 a cheat, or like a trick. It's not really a cheat, a trick that makes this so simple to determine what your lot size should be, or how to determine really how heavily or slowly a currency pair or a certain asset moves and fluctuates. For example, Bitcoin. Okay, we'll do one more example for Bitcoin. Okay. We're kind of going through a number of different examples here, but the point is, the whole point of us giving this lesson is to understand, number one, what is a pip? And number two, what is a lot size? So Bitcoin currently priced at around 108,800 per coin. Okay. If you were to see a fluctuation to, as I was mentioning before, 120,000, that is the equivalent of 12,000 pips, because every $1 fluctuation on most brokers, every $1 fluctuation is the equivalent as one pip, or the equivalent of one pip. So Bitcoin moves very heavily. Okay. This is your pip on Bitcoin. That $1, that you're seeing there, that's the equivalent of one pip. And you will see Bitcoin move very heavily. Okay, very heavily. So the lot sizing that you're taking on something like Euro USD or gold, I mean, gold, it's probably going to be a smaller lot size. Euro JPY, probably going to be a slightly smaller lot size than on Euro, just because of the way that lot sizes are kind of working. But on Bitcoin, you're certainly going to have a smaller lot size than practically anything else that you're going to be trading in the markets because of how aggressively it moves. I mean, you'll see this fluctuate on the right-hand side. This is in real time, 108,793. You're going to see this fluctuate probably a couple $100 just while we're on the call today. So, but that's usual. That's typical with Bitcoin. It's not like something that you're meant to look at and be like, this is scary, right? Volatility is a good thing as a trader, especially when you really understand what's going on from an institutional perspective. And when we're talking about that on tomorrow's session, I'm promising you guys tomorrow's session, out of all the sessions this week, they're all going to be really valuable. Tomorrow is my favorite personally, okay, because of what we're going to be talking about and really unpacking. It's going to be probably the most paradigm shifting call of this week. So really, really look forward to that. But yeah, shout out to those of you guys who are making some money trading this week. We'd love to see it. Okay, so that's the basic overview of a pip. Simply put, it is a way of measuring the movement in the markets, and then a lot size is what's going to determine how much money every pip is worth for you in your trading. A key point, if you haven't written down in your notes, now's a good time to do it. Depending on what you're trading, whether it's a currency pair, whether it's something like Bitcoin, whether it's something like a cross currency pair, euro against the Japanese yen, because it doesn't include the US dollar, it's called a cross pair. The weighting, and what I mean by that is like the weight of your lot size is going to be different from one asset to the next. So just write that in a little with little asterisks beside it on your page. It's not something you need to worry about per se. It's just something you need to be aware of. That way you don't go from one currency pair to the next and drop the same lot size and then have a, oh my gosh, moment because you dropped a way bigger lot size than you meant to. So that's the first topic that I wanted to go over. Oh, and by the way, just by a show of a number one in the chat, who's been messing around with a demo account or who's taken some trades since we started this, boot camp so far? Who's actually had some time to go on there and just kind of mess around with MetaTrader 5 a little bit? Drop a one in the chat if you've had an opportunity to. And I would encourage you guys to, if you haven't already, just because it's going to help you familiarize yourself with the platform. And, some of you guys are veterans on here. You've, been using MetaTrader 5 for a while, which is great. But if you haven't had an opportunity to take any trades yet, we're about to take one together right now. Okay, we're about to take one together right now. So do yourself a favor, take a second and get your phone out. Okay, and I want you guys to open up MetaTrader 5. Okay, go ahead and open up MetaTrader 5. Been taking trades for a year. Awesome. Love to see it. We love to see it. If you decide to use real funds, that's completely up to you. This is a real trade idea we're about to share live on the session. So, should you decide to take this trade idea, right, use proper risk management, and that is on your own accord. Okay. If you're new on this call, maybe you decide to take this trade on a demo account, but this is a real trade idea that we're about to place together right now. It is a pending order that we are about to share. So real quick, let me pull this up. And just so you guys know, like this is a trade idea that people are usually paying money to have access to. So you guys got to do me a favor and just not let this person know I'm about to share his trade idea for free with you guys. Can you guys give me a two in the chat if we can be on the same page with that? Is that okay? All right, we gotta keep this on the hush hush, okay? I can't just hit him up and be like, hey man, you know, may or may not have just leaked your, paid trade idea to a group of almost 70 people live on session. Oh, and it's being recorded, so people that are watching the recording might take the trade too. But as long as I have your guys's word, I'm gonna trust you guys to keep this between us. But the reality is, we want to give you guys a full taste of what it's like to be a part of the community, right? So we're going to give you guys a couple of trade ideas. There's actually going to be two different ideas for free right now, and these are going to be pending trade ideas. So, this is very important. I forgot to talk about this. We need to backtrack for a second. We're going to get to the ideas momentarily, but this is a very key point that we need to address before we dive into it. There are four different basic types of orders. Write this down in your sheet, in your notes. Okay. There are four basic order types when it comes to trading. Four basic order types. So, well, technically five. The first order type is what we call a market execution trade. Write this down in your notes. Market execution. Okay. Market execution. What that means is you are taking the position, you are entering the trade right here, right now, in this moment, which means that you're in the market, you're in the trade right away. Okay, so first type, market execution. Right here, right now is the best way to kind of think of that. Okay. There are then four different types of pending orders. You have, write these out in your notes, and you can also leave a little bit of space underneath to draw a diagram. Okay. It doesn't have to be a massive diagram, just like a little small diagram. But the first type of pending order is a buy limit. The second type is a buy stop. And then the last two are sell limit and sell stop. I'm going to give you guys a diagram that you can go ahead and kind of copy into your notes of each. And you guys can even screenshot them if you want. Just wait for this message to update. Okay, cool. So there's really five different types of orders, basic orders. There's a couple other more advanced orders, but the more basic ones are the four on screen. So you have buy limit, buy stop, sell limit, sell stop. Pending orders are essentially trades that you're placing in advance. So this is perfect for those of you guys that are like, man, I got a busy schedule, Donnie. Like you're trading full time, aren't you lucky having all the time in the world to take trades at home, da da da. Little do they know I trade for like 30 minutes a day, an hour a day. But maybe you're thinking that, right? And it's like, okay, no, no worries. You know what? You're right. You're busy. You got a busy work schedule, you got a busy school schedule. I totally relate. I can totally understand. You can't be on the charts at the times that maybe it's most opportune. But what you can do is you can place pending orders. And that means that whether you're at your computer, whether you're at your phone, whether you are in a position, okay, whether you're in a position to be on the charts when the trade is entered into or not, the trade will activate for you automatically. Okay, so you're predetermining your entry, you're predetermining your exit on these particular trades in advance. So for those of you guys that want a little, visual for each of these types of orders, I'm going to share my screen and pull this up. We're going to start with the top one, which is buy limits. Okay, I'm going to pull this up on screen. And like I said, we're going to actually place two pending orders together right now. So this is an example of a buy limit. So you can kind of, doodle something along these lines. All right. When you place a buy limit order, you can even read the little description at the bottom. Just take a screenshot of this. This is probably the best thing to do right now to save time. But you're placing an entry for below where price is currently at in anticipation of when price reaches that level, it to bounce. Okay. So if let's say the price is up here of a certain asset, okay, you're anticipating that price is going to trade lower to a certain price level and bounce to continue going higher. Now, you might be thinking to yourself, if you're newer on here, like, how the heck am I supposed to know that? Well, we teach that. Okay. Some people say that we have like crystal balls. It's like, how could you possibly know? You must be a wizard or something. And it's like, no, I understand technical analysis, which is a type of analysis. It means looking at a chart and gauging based on what that data is showing you where price is likely to come back to and then bounce to continue trading, in this case, higher. So a buy limit is below current price. You're anticipating it to come down into your area where you have the buy limit set. That's when it will activate your trade, and then you're anticipating price to trade higher. Now, if it doesn't, and your activation takes place and then price trades lower, well, that's why you have a stop loss. Okay, your stop loss is what's going to take you out of the market for a small loss instead of you just waking up the next day and you're like way in drawdown. Okay, that's what's going to be determining your risk for you. The second type of order to go through this, we're going to go through this a little bit quicker now. Okay, the second type of order is a buy stop. All right, kind of similar, but not really. Okay, to be honest, it's similar because it's also a buy. But this case, or this particular type of order, price, you are anticipating price to trade to a higher point than it is currently at, and you're anticipating it to continue trading higher from there. So maybe you do analysis and you're like, okay, current price is here. And maybe based on your analysis, if price breaks this level, you're anticipating it to continue trading higher. So you place a buy stop above current price in anticipation of price to reach that level and then continue in your direction. All right, maybe your buy stop gets activated and then price goes against you, it sells off. Hence why you have a stop loss. That's going to be what protects you from that particular trade going against you. Now, you guys can probably imagine where I'm going from here with sell limit and sell stop. It's practically the same thing, vice versa. Okay, practically, it basically is, virtually the same thing, vice versa. So sell limit, you are placing a sell order. Again, we can make money when the market's trending and trailing down. Okay. But let's say that price is at a low point and you're anticipating price to trade up to a higher point. That's where you want to sell from in anticipation of a continuation lower. You can set a sell limit order. One of the ideas we're going to be taking together today is a sell limit, to my knowledge. Actually, I think they both are. Actually, hold on, let me see. One of them's a buy limit, one of them's a sell limit, I think. Let me pull this up. Yeah, one's a buy limit, one's a sell limit. So we're going to be taking two different limit orders today. And sell stop, you probably guessed it already, but a sell stop is the opposite of a buy stop, where price is at a high point, you're anticipating it to sell off to a low point and then continue selling off. That's what a sell stop order is. Now, if price goes against you, or let's say you enter your trade, but then price trades, higher, you have a stop loss in place so that you're losing no more than what you've allocated on that particular trade. So let's go ahead and dive into actually these trade ideas we're going to take together on this session. All right, let's go ahead and pull this up. Now, one of the educators that we have access to on a regular basis, aside from myself, you guys have access to me, obviously, this week and then also inside the community. But we have a wide variety of educators that we have access to inside the platform. And I'm going to show you guys the application that we have access to. I'm going to share my phone screen real quick. And for those of you guys that are not already on the, GFU Connect app, this is the application that, the company that we're in partnership with, Revolt and GFU, we're partners, strategic partners. This is the application where all the trade ideas, all the educational sessions, or at least the announcements for the educational sessions takes place. So a lot of the times when you're coming up onto, an educator's page, for example, Camille is who we're going to be sharing some ideas from today. Okay, again, keep this between us. But he's sharing multiple trade ideas on a regular basis. Now he shares specifically pending trade ideas, which is perfect for you if you're working and you're, busy lots of the time. You can just set it, forget it, go about your day, and you're in a good place to do so. So the first trade we're going to take together is this one that we have on screen. Now I'm going to zoom into this particular idea, and you'll notice that in the top left corner, I can see exactly what the currency pair is that I'm going to want to look up on my particular trading app. So for me, in this case, it's MT5. So take out your phone. You can also get MT5 on the computer, but your phone's probably the best thing to take trades on for now. Take out your phone, pull up MetaTrader 5, and when you have that ready to go, drop a 5 in the chat. Okay, I know if you're on Zoom from your phone, it might be a little bit tricky to do this simultaneously, but you can have like the little window, kind of like I have, the little window here. you can have that on your screen while you're on MetaTrader 5. You can also like reduce the size of it. All right, kind of make it a little bit small. Okay. So seeing lots of fives in the chat. Perfect. Perfect. So first thing you're going to want to do is from MetaTrader 5. Okay. On the quotes page. All right. This is the quotes page, bottom right corner, or sorry, bottom left corner. Right. You can kind of see it, bottom left corner, quotes page. This is on an iPhone. It looks a little bit different on an Android, but it's practically the same. Okay. Yeah, good response there, Blake. Yeah, 4 or 500. Thanks, Aiden, for chiming in on that question in the chat too. First thing you're going to do is type in the symbol at the top of the screen here. So GBP CHF. Notice how I already have a blue check mark beside it, which means it's already in my quotes page. If it's not there for you, make sure you add this. If you are on PU Prime, okay, you're going to want to choose GBP CHF dot S or GBP That just represents standard or prime for your account type. If you're on Next Trade Wave, I don't believe there's any suffix at the end of the currency pair. I believe it's just GBP CHF. I could be mistaken. Maybe Blake, if you want to correct me in the chat. Just the pair. Perfect. So in this particular instance, I'm going to pull up GBP CHF in my list. I have a really lengthy list. I got to clear this out, man, to be honest. But GBP CHF is at the bottom here. So I'm going to click on this. I'm going to go to the chart window. Okay. Now, when you guys are taking a trade idea, you have the opportunity, when we're sending it to the free trial Telegram, we'll tell you what lot size to use per every $100 you have in your trading account. Because we're looking at this for the first time right now together, I'm going to do a process to calculate the lot size for you guys. A dot H at the end for you. Perfect. Yeah, depending on your broker, it might be a little bit different. Okay. So I'm going to pull up the trade idea. And in this screenshot, we can see what the educator is looking for. So he's anticipating price to trade lower down into this zone and then bounce to continue trading higher. Now, this is a trade idea on the 4-hour time frame. So this is a bit of a longer term trade, and it's going to take some time for it to play out. But notice how all these zones and parameters are given to us on screen here. So you have zone of action, which is your entry point. You have invalidation level, that's your stop loss point. Then you have exit 1, 2, 3, and 4. Okay. So what we're going to do together now is we're going to take this trade. I'm going to show you guys how to do this. All right. If you're already experienced, obviously you can feel free to go a little bit faster than what I'm going to show on screen, but I would encourage you guys to just follow along step by step because I'm going to show you guys exactly how to do this with proper risk management and how to calculate proper risk management for yourself independently for after you're done with the free trial. Okay. So if you guys are ready, drop a 3 in the chat. I want to get this engagement up. All right, make sure nobody's falling asleep, especially when there's trade ideas being shared. Okay, so first thing I'm going to take a look at is the invalidation and the zone of action. I'm going to look at those two price levels, which are on screen. I might have to zoom in a little bit so you guys can see them, but you can see these two highlighted numbers. Those are your entry and your stop loss price. So I'm going to jump over to GBP CHF. Now, for you guys, what I want you to do is I want you to click on the trade window and choose trade, or click on the chart, choose trade. Okay. First thing I want you to do, and this is the trading page. Okay. First thing I want you to do is click where it says market execution at the top. And you're going to want to toggle this to a sell limit. Sorry, to a buy limit. Okay. This is a pending buy limit order. The other one we're going to do is a sell limit. Okay. Buy limit order. So price, notice how there's 3 different sections here where it's asking you to set a parameter. You have price. This is your entry price, which for this particular trade is at 1.08014. 1.08014 is what I'm going to enter in at price. Stop loss is the invalidation price or invalidation level, which is at 1.07813. 1.07813. 1.07813 is what I'm going to enter in at price. Stop loss is the invalidation price or invalidation level, which is at 1.07813. 1.07813 is what I'm going to enter in at price. Stop loss is the invalidation price or invalidation level, which is at 1.07813. 1.07813 is what I'm going to enter in at price. Stop loss is the invalidation price or invalidation level, which is at 1.07813. 1.07813 is what I'm going to enter in at price. Stop loss is the invalidation price or invalidation level, which is at 1.07813. 1.07813 is what I'm going to enter in at price. Stop loss is the invalidation price or invalidation level, which is at 1.07813. 1.07813 is what I'm going to enter in at price. Stop loss is the invalidation price or invalidation level, which is at 1.07813. 1.07813 is what I'm going to enter in at price. Stop loss is the invalidation price or invalidation level, which is at 1.07813. 1.07813 1.07813. And then take profit, when we have different exits or different take profits, as you can see, there's exit one, exit two, there's actually four on this particular trade. You can choose one of those options. And also, depending on your account size and depending on your lot size that you place on the trade, you can choose to close out a partial of your position. You don't have to close out the entire position if you have greater than a 0.01 lot size. So I'll actually explain what I mean by that in a second here. But for this particular trade, we're going to take exit two, which is 1.08828. Okay, I'm going to do this demonstration again. Don't worry. We're going to do it twice on each idea. 1.08828. Now, before you click place, you're going to want to focus on this number in the top middle of your screen. That is your lot size. So for this particular trade idea, the lot size that you should be using on this particular trade, I'm just going to calculate it real quick. Don't mind what I'm about to do. You guys can just, practice and kind of get ready. Do we actually activate this trade? Oh, this came I think this came really close to activating. Did this fill anybody already? Fill anybody's order already? I'm just looking at this in hindsight. I think this might have already activated potentially, but we'll go through the motions either way. Don't worry about what I'm doing on screen at the moment. This is just to calculate the lot size for you guys. 8130804. Yeah, I think this might have actually activated. Think it's still good. Did it come out a little bit later? I'm not sure. 1.08014. Okay, cool. So for those of you guys that are trading on a $100 trading account, or the lot size you can use for a $100 trading account, or for every $100 you have in your trading account, you can actually go ahead and use a 0.02 on this trade for every $100 you're trading with. Okay, so for every $100 you're trading with, 0.02 per $100. So for me, with my current account size, I'm going to be using a bit of a bigger lot size for this particular trade. Okay. But for those of you guys that are trading on, an account size of like $100, 0.02. If you're trading with an account that's got like 500 to $1,000, right? Obviously, you're going to adjust the lot size accordingly. But for this particular trade, 0.02 for every $100. Okay. So I'm going to go back to the trade window. For me, I'm taking 0.2 on this trade for demonstration. Okay. From the trade window, the first number you want to input is the entry. So where you're looking to enter this particular trade. This is a trade idea from Camille. Camille's an educator with GFU. So the entry price was 1.08014. 1.08014 is your entry price. Stop loss, 1.07813. If you have less than $100, just take a 0.01 because that's the smallest lot size you can use. Take profit, we are going to set at 1.08828. All right, so this is the exact parameters as you see on screen. Go ahead, take a minute, double confirm on your end. And once you're good to go, once you have the same exact parameters input, you can, go ahead and just confirm in the chat by dropping uh, I can't remember if I said a number. Drop a 3 in the chat if you're ready to go because you got all three numbers input in this page. Again, make sure you have it set to buy limit at the top. Make sure it's GBP CHF. Make sure you've got price 1.08014. Stop loss. Oops, stop sharing my screen. Let me pull it back up. Time frame doesn't matter for this trade idea. It's a 4 hour time frame analysis, so it's a swing trade. But for the trade idea, it's not really relevant what time frame the analysis was from, other than just, if you're trying to wonder how long it's going to take for the trade to be executed or to play out. So is everybody good? I'm missing a lot of threes. Either you guys just aren't typing threes in the chat, or or you're still trying to put it in. I'm seeing a good amount of threes, but there's a lot more of you on this call. So I just want to make sure everybody's good to move forward. Okay, there we go. Threes are flooding in now. Perfect. So your lot size should be 0.02 for every $100. If you have less than $100, 0.01. Do the math, guys. Okay. For every $100 in your account, 0.02. So if you have a $500 account, 0.02 times 500 is 0.10. Okay. Cool. Okay. So we're going to click place. There you go. So exciting. You placed your first trade. Maybe some of you. Now we just wait. Okay. On this particular trade, for me, I'm risking $50 to make $200 on that trade. Will you learn how to calculate your lot size? Yeah, I mean, I'll send a video in the chat right now for you guys if you want to learn how to kind of calculate your own lot size. Um, I'm not gonna, go over it just in an effort to save time, but this is a video that kind of showcases. This is just a buy limit, not a buy stop limit. And the difference between a buy limit and a buy stop limit is something that we're not going to talk about on today's call because it's not entirely necessary. And it's pretty rare that you're going to find yourself using a buy stop limit. If you're only seeing buy stop limit, Tasha, what trading platform are you using? But yeah, Connor, I just dropped the YouTube link for how to manually calculate your risk. MetaTrader 5. What broker are you using? Yeah, this could be a trade idea that's already active potentially because it looks like it did trade down to entry. But I know it was from he sent out a message earlier today um, saying I'm person X leaving your AUD and GBP So maybe it just activated earlier today. But either way, it's still good putting in the reps for you guys, even if it's already active. Exodus MT5. This trade is already gone. Well, to be honest, if we trade it back to entry, it's still valid on this particular setup. But we're about to set one that for sure. Well, let me just double confirm. I don't think this one's played out yet. Let's see. Don't worry about following along. We're gonna go slower in a second. Okay, cool. Yeah, this one has not activated yet. Perfect. Let me just do, whoops. Okay, cool. Next trade idea will be 0.01 for every $100 in your account, you guys. So let's go ahead and wait, am I tripping? Is this I thought we had two I thought we had a buy limit and a sell limit. I guess we just have a sell limit for each. Or wait, we just did a buy limit. Am I tripping? Wow, this is crazy. It's been a long day, clearly. Okay, let's move into the second idea. So from the GFU app here, this is again an idea that we're going to take a look at together for how we would go about placing this. First thing I'm going to take a look at is the trade pair, so euro against the Australian dollar. So euro AUD is what you're going to want to type into your quotes page. Okay, again, go back to the quotes page, bottom left corner of the main screen on your MetaTrader 5. Quotes, you're going to type in EURAUD, euro against the Australian dollar. All right, go ahead, pull that up, make sure that it's added to your quotes list. Once it is, you're just going to scroll through and find it. It'll probably be at the very bottom if you just added it. If it's already in your quotes page, you might have to dig around for it and find it. Once you got it, you're going to click on it and you can just choose trade. And for this particular example, we are going to be doing a sell limit. So choose the order type at the top of the screen. You're going to select sell limit. You're going to be placing, for this particular trade, your lot size will be 0.01 for every $100 you're trading with. Okay. For demonstration purposes, we'll pretend that I'm trading with a $1,000 account. Okay, 0.1 if you're trading with 1,000 bucks. Price. This is your entry where you're placing the entry where it's going to be executed once price trades to that level. The entry price in this particular example that we're going to be taking is at 1.79996. That's the bottom of the entry zone. 1.79996. Okay. Stop loss is the invalidation level, which is 1.80573. Okay, 1.80573. And then again, there are different exits, different take profits that we're looking to aim for on this particular trade. So we're going to take exit 2, 1.77649. 1.77649. Once you're ready, once you've got these three parameters input, make sure you've adjusted your lot size. Okay, this is what is going to be making sure that you're using proper risk management and determining how much each pip is worth. If you accidentally have a different number here than what you're supposed to, that could be potentially catastrophic. It could also potentially be the best day in the world, but you don't want to get into the routine of placing the wrong lot size. Okay. That's like the number one most important thing in trading is to make sure you're using proper risk management. So 0.01 for every $100 you're trading. Okay, drop a 3 in the chat if you got all three inputted and you're ready to go. Input, not inputted. Exactly. Yep. Lot size is major, major keys, for sure. For sure. Please recap the parameters. They're on screen. So the price, your entry price is 1.79996. Stop loss is 1.80573. Take profit, also on screen, 1.77649. Cool. Let me see some more threes. If you guys are ready to go, don't drop a 3 if you already did, but just to make sure everybody else is good to go. Perfect. Okay. Once you're good to go, make sure you've adjusted your lot size according to whatever your account balance is, whether it's your live account or your demo account, 0.01 for every $100 on this particular trade. That might change from one trade to the next, depending on the currency pair, depending on how many, pips the stop loss is, but we're going to go ahead and click place. Now, on this particular trade, if we take a look at it on screen, for me, I'm risking about $40 to make 150 on that particular trade idea. Remember yesterday when we talked about the importance of risk to reward? For those of you guys that maybe missed it, I'd encourage you to go back and watch it because these are the types of trades. This is the way we are setting up the rules to quote unquote always win. Because you could literally be losing more trades than you're winning and still be profitable because look at the risk to reward on this trade. I mean, this is beautiful. Risking just under $40 to make 150, That's a beautiful risk to reward right there. Now, if you're trading with like $100 account, you might look at this and be like, wow, to risk $3, to make $15, it might, you might be like $15 is nothing. I feel like, oh, is it pointless for me to trade with such small funds? Well, no, just get in the routine because the same trades that are making you $15, 15 cents, whatever the case may be, you'll be in a position where those same exact trades in the future when you're trading with more capital will be worth more. The only reason that yours wouldn't let you place the trade is because you might have one of the parameters input incorrectly, or the trade idea type might be different than what it should be. So from this window, make sure you have it set to Euro AUD at the top. Make sure you have market execution toggled to sell limit for Euro AUD. And then just once again, I'll put in the entry parameters. What do we got here? 1.79996. Stop loss is 1.80573. Take profit is 1.77649. So your parameters should look exactly like they do on my screen right now. So far, so good. How are we feeling placing some of these trades? I know you guys are like, you know, wow, this is cool taking your first trade. And I know it's not active yet. Okay. You can leave the trade, let it do its thing. Okay. Got it. Had it on buy limit. Perfect. Perfect, Megan. Good stuff. Good stuff. So that's the process for taking trade ideas. Okay. Angsty to see the results. Exactly. Exactly. This is the process for taking trade ideas. Now, for those of you guys that are like feeling a certain type of way about taking trades, first thing I'm going to say is number one, you can always use less risk than what is recommended if you're starting out. Okay. You can always use less risk than what is recommended to start out. You can also just start trading on a demo account and focus on that. Okay. Both trade ideas that we took were considered swing trades, trades that are going to take some time to play out. And really, the one thing I'll mention too is the only reason you will ever experience an emotional roller coaster when you're taking a trade is number one, you're risking more than you should be and you know it. Number two, you're risking more than you should be and you didn't know it until you knew it. So it wasn't intentional. Or number three, you just don't have confidence built up yet. And that's okay because you have to do the right things long enough consistently to build confidence. You're not just going to be like confident after 2 days of a trading boot camp and you taking a couple of trade ideas on a session like this live, right? It's going to take you time. It's going to take you. You guys are going to understand. And just out of curiosity, like how many of you are actually dedicated to giving this thing 6 months to a year? Because I'll be real, like 1 week, this is going to be a great start. This is going to set you guys off to the races for sure. But you really got to be dedicated and locked into something like this for the next 6 months to a year if you really want to see results. Like I'm talking, if you want to get what most people don't have, you got to be willing to put in the work in a way that most people won't, and in a skill that most people have no idea about, which is exactly what we're talking about trading. Like if you go to, I remember, actually, not even I remember, every single time I go out somewhere, I feel like I'm a lone wolf because every single person that I'm around at the grocery store is probably not trading. Probably not. It's actually, we talk about it a lot. Trading can be really lonely if you don't have a community because very few people are traders and very few people are experienced in this niche, which is also why we do these calls. It's to bring traders together. It's why we have the community. It's to be able to learn from people that have what you want, have been where you are, the educators, but also just to be around like-minded people so that you can grow, you can scale, and you can, really get to the next level. Because let's be honest, like this is stuff that most people don't talk about. And respectfully, people that are working 9 to 5s have a different mindset. They are not focused on, retiring mom and dad. or maybe they are, but it's going to take a while if they're just doing the 9 to 5. So it's just a matter of, making the decision to be process oriented, not profit oriented. That will save you a ton of money in this journey. Okay, be process oriented, and just understand that, regardless of whether you've been trading for a while, maybe you're completely brand new on this call, like anything worthwhile takes time, energy, and effort, as well as trials and tribulations. Like there will not be success without temporary defeat. Okay, a blown trading account because you messed up your lot size by accident. Oh my gosh, end of the world. No, man, that's part of the process. You guys want to know how many accounts I've blown in the almost 8 years of trading now? Nah, honestly, you don't want to know. It's been a lot. Okay. Now, learn from my experience. Don't make the same mistakes as me. That's why we're talking about risk management. That's why we talk about risk to reward. That's why we talk about all the things that are really important that I wish I knew when I first started. That's why we're doing this whole thing. But yeah, chalk it up as tuition. If you're in a position where you've been trading for a while and you're experiencing losses, it's a good thing you're here. It's a good thing you're a part of the boot camp. Okay, this is for you. But also just understand that this is the equivalent of you paying tuition to go to college to learn a skill. Only difference is, it doesn't need to cost tens and tens and tens of thousands of dollars. You know, it shouldn't. Okay, unless you're blowing trading accounts at a really high level. But with that being said, that's going to wrap it up for today in terms of the lesson. I'm going to end the recording. For those of you guys that are on the session live, we'll do a Q&A. We'll open things up. And tomorrow, I'm very excited for tomorrow's session. Tomorrow, we're going to be talking about how the banks trade and really understanding how to follow in their footsteps. And it's one of my favorite trainings, to be honest, tomorrow. So it's really going to be fun. It's going to be exciting. Thursday, we have a whole AI scanner training planned for how you can actually use some of the tools and resources that we have at our fingertips for making the trading process easier, more simplified. And then, of course, Friday, we're going to be taking applications officially for the community. And you guys are going to have an opportunity to really, see what we're all about, and potentially, join the community if we see eye to eye, and it's a good fit. If you're someone who's like really wanting to get your foot in the door for those applications, you can reach out to whoever invited you to this boot camp sooner, by the way, and they can connect you with one of the leaders, and we'll have a conversation before Friday. If you're like, all right, I've seen enough, I want to get more information. It's possible, and that would obviously bump up application wise, your application because you're applying sooner, technically, sooner than Friday. But stick around with us. We're gonna have another 3 days of calls and training. So if you're on the recording, see you on tomorrow's training.